It's not gambling if you know where the market's gonna go. That just hit, right? That just hit. That just hit right there. That just hit right there. The song just hit. It hit right there, boys. Good morning this morning, man. Fun morning. We had D-Money in there, making money with us today. Hey, look. Nasdaq held that 380 level. A lot of haters this morning. A lot of haters, man. It's amazing to see how many fucking haters there are. Are we all just trying to make some money? You know what I mean? Are we all just trying to make some money? You know what I mean? Are we all just trying to make some money? That's what I'm trying to make. Some money. Honey. All right, so the Nasdaq pushed back up here. We got the FOMC rate decision numbers coming out here. What do we think? What are we thinking, chat? All in long, go to the moon. The news is coming. I mean, we sold off this morning, right? The big boys were loading up at the lower prices. The ES pushed back up. The Dow's been kind of flat. Nvidia is trying to push back up. I feel so good. Put me down, put me down, put me down, down. Thank you. Dip me down, dip me down, dip me down. All right. It's gonna dump to the 400 and then rip to OPR. Ugh. Dippity dipping. We got still 12 minutes here till the news comes out. 12 minutes. I'm fired up either way. I'm fired up either way, baby. Now, what we really want to do is we want to stay alive, right? We want to stay alive, get through this news here, and then hopefully after 3 o'clock, market can move a little better. Would be ideal, but let's see what happens. Bring it down, bring it down, down. Right now, just kind of a little bit of a pullback here into that previous area of resistance. Who's got this much energy in the afternoon? Who? Nobody. Nobody, chat. Nobody. What I have for lunch? Went to a little local sandwich spot. Little local sandwich spot. Big Lou's. Big Lou's. Big Lou's. Trying to figure out, I might YOLO some Apex. I got 7 Apex 250K accounts that I might try to pass here. What do we think? Long or short? I think it's a long. Short the pop. I think it's a long. I gotta find out. Short and long at the same time. Well, that's hard. I'm just gonna try it. Gonna start loading into this. Start just loading into it, chat. YOLO. News coming out here. Don't follow me. Don't do what I'm doing. I'm a millionaire. It's okay if I blow up a few accounts, okay? These are Apex evals, by the way. Apex evals. You cannot YOLO on the news when you're trading a PA account. So again, this is only for entertainment, okay? This is only entertainment, chat. This is not financial advice. Someone said express elevator ride to hell. I don't know, man. I don't know. That don't seem right. That don't seem right. Someone said, so you put everything on long? No, I did not say that. Don't even try to be like, he's told me to get long. Again, warning. I'm a millionaire. Unless you're a millionaire, don't do what I'm doing. And I think nobody in this chat is a millionaire. So don't follow me. Again, not financial advice. I'm an idiot. I have no idea what I'm doing, but I will be going long on FOMC. It might never work. All right, it might not work, but it might work. You know what I mean? There you go. Oh, fuck. I'm gonna try to buy more here when this news comes out. I was hoping for maybe like a dip down, but... John Don, you're a millionaire? I doubt it. If you're a millionaire and you're watching me live on YouTube, you're fucking retarded. That seems very retarded. If I was a millionaire, the last thing I'd be doing is watch some guy on YouTube with red hair. You know, that's the last thing. I'd be like, why the fuck would I listen to this idiot? Are you guys, this music right now has me fired up to go to the fucking moon. God damn it. I might have to add into this already. I don't want to add right here. I wanted to go low. I wanted to dip to the 400s, then add into that. Someone said you're trading macros. No, I'm trading fucking micros. No, I'm trading. This is 7 accounts. I got 7 Apex accounts. These are not fucking micros. These are minis. I gotta. Also, we got a big deal next week. Battle of the sexes. My market, well, battle of the sex. Because there's only 2 women. I know there's 2 photos of me, but like, there's gotta be one sex here, okay? Only one sex. 3 men. I identify as a woman now, okay? Follow me, buy my course. Patrick Wieland trades. It's only $9.99. My uncle's coming tomorrow, and we're gonna be able to talk about what it's like to just be rich and sell courses. So if you guys are really, really interested, make sure you tune in tomorrow. We can talk all about it with my uncle when he's here. I cannot wait. Guys, you don't understand what it's like. Nobody understands what it's like. The whole market right now trying to push up here, the Nasdaq, the ES. Can I get Tory trades one day? I doubt it. I highly doubt it, but maybe. I've done crazier things. Tory, if you're watching, come to the BDH. I want to compare my BDH to your BDH. Can I say that? Is that allowable? It's not. It's like a joke, you know? Oh, good thing I didn't add up there. Everything's fine. Nothing to worry about here. We got 1 contract per account right now. 3 minutes. Oh, fuck. The problem is, if I only held 1 contract, I would need to pass these accounts. I got to make 15,000. So I would need the market to go up like a 5 million points. So I don't think that's going to happen. But I do like the idea of the market going higher here. Again, not financial advice. Don't copy me. I have no idea what I'm doing. Okay, this news is going to come out. It's going to rip somebody's fucking face off. If you don't know what to do, don't trade. Best thing to do here is don't trade. Don't do it, chat. Don't do it. I gotta pee so bad. What should I do? It's gonna go off the charts. Get ready. It's gonna go whee! Like, how high can it really go, realistically? High of day, 553. We got news coming out here in 1 minute. I need to kind of add to this, I guess. Go big or go home. Fuck. Go big or go home, motherfuckers! Go big or go home. I hope they don't flush it. I really hope they don't flush it, chat. Please don't flush. If they flush it, it's all over. Please don't flush. Don't flush, Nasdaq. Don't flush. Oh, get ready. Boner candles. Oh, my baby Jesus. Oh, I'm scared. I'm very scared right now. I'm very scared. It's going up. It's going up. But it needs to go higher. Oh, God. This is not good. I might get stopped out because of trailing loss. Fuck. The news already come out? Like, the market hasn't even moved. What are they doing? Are they cutting? I haven't even looked yet. What are they doing? 25 basis points? No change? 25 basis points. 25 basis points. Fuck. I can't tell if I should stay long or what here. 25 only. Hey, at least they're cutting. But yeah, this ain't looking good. What a wow. Market really moved nothing. It's gonna have to load into this somehow and maybe get a pop here. If not, we're gonna blow these accounts. So we're blowing them. It's gotta like go straight up right here or these accounts are gonna get blown. Wow, FOMC, no more fun anymore. Can't even get a fucking 100-point move on FOMC. Can't even get a 100-point move on FOMC anymore. Used to be fun. Trading used to be fun, chat. It used to be fun. Trading used to be fun. I gotta like maybe just take profit here. Let me see if I get a little bit more pump. Can we get through 500, do you think? I gotta do something here soon because if this pulls back on me, I'm fucked. Can we get through 500 again? Oh no, it's gonna be really tight. Oh, we're right there at the 500s again. Oh! Just gotta lock it in right there. Oh God. God, I went in the bathroom and the editor just shit his pants. God, I had to breathe in his fucking farts. Dude, what the fuck? God damn it. Fucking editor, man. Goes in the bathroom, dumps a big old turd in there, and then I have to walk in there and smell that shit. What a joke. All right, all right, all right. Well, so much for the fucking dump. Remember somebody in the chat, everybody said, Patrick, it's got a dump. You're retarded. You don't know what you're doing. What happened? Did I know what I was doing or what? Do I get a gold star today or what? Do I get a gold star or what? What's gold doing? God, even I can still smell it in my nose. Oh my, look at the gold. Oh my God. Yeah, the 2% drop and we're gonna leave in the market and he won't leave. What happened to him? He left, clearly. All right, the high of day is that 550 area on the Nasdaq. We're right there at yesterday's close. Is there more coming? Five-minute chart right now. Trying to figure out like if this is a spot to get short or try to buy this pullback here. Matt just made $8,000. Let's go. Let's go, Matty boy. Hey, who liked D Money this morning? I thought D Money was pretty cool. I'm gonna maybe try to get D Money to be on the live stream more often. Anybody else? What do y'all, you want that, chat? You tell me. You guys decide. Bring D Money back. Bring D Money back. I was thinking about this. Think about this. Think about this. What about this? What about this idea? What if D Money did his own show from like 2 o'clock to 4 o'clock every day at the BDH? That could be a thing, right? Like, that'd be fun. He could have his own little show, D Money show, the afternoon show. And then, you know, obviously I'll still do my morning show, but like, D Money could take over the BDH every afternoon. Power Hour with D Money. I think it'd be pretty cool. Power Hour with D Money. That, because, you know, I can't be doing everything, you know? I'm getting old. I'm getting old, Chad. I'm 37 years old, you know? Somebody on the internet said that I'm already past my peak. All right, well, it looks like Nasdaq, again, just kind of pulling back here to the VWAP. Luckily, we took profit on that long. I was long from the fucking 453, sold it all there at the 500s, locked in about 80 grand in profit. Now the question is, where do we go from here? D Money was great. I agree. I like D Money. And he actually, I mean, like I said, he got like, he actually has some type of fucking idea what he's doing. You know, he ain't claiming to be an expert, but at least he ain't fucking retarded. God, dude, if it's they're out here now. New rule, no more pooping at the BDH. No more. Dude, the editor just smoked out the whole fucking place. I'm coughing. I can't even breathe. I'm gonna get editor the fucking porta potty. The worst part is I paid for his lunch and that's how he repays me. Comes back to the BDH, takes a big shit, and then just laughs, giggles about it. Hee, it wasn't me. I asked Ginger if it was her. She said, I think it was me. I was like, I don't know. I don't know how that works. Man. Gold going to the moon right now. The Dow's ripping. The ES is pulling back here. We're back right where we fucking started this whole thing. I knew this would be like an issue, right? If the Fed didn't cut 50 basis points, the market already priced in, basically already priced in the fact that they were going to cut 25 basis points. So that's why we've gotten pretty much no reaction here, because it wasn't a surprise. If they would have cut in 50 basis points, then we would have got a lot bigger of a move. But basically, we already knew.
Jason had a raccoon for lunch, rolling on the floor, laughing, rolling on the floor, laughing.
Jason had a raccoon. Ruben thinks you're eating a raccoons for lunch. Oh. Gold is going to the moon. Do we trade gold? I don't even know how to trade. I don't even, like. Gold is ripping right now. 742 on gold. Nasdaq back down here. Right to where this news started. That's the best part. The news came out, and we're just right back to where we started at. Someone says, please trade gold. I'm scared of gold, to be honest. The ES made a new high, by the way. It took out the morning high, took out the overnight high. The Nasdaq has not done that. Like, I'm trying to figure out, like, if this is just like a pullback before we go higher, or are we going to go lower? That 15-minute candle, nasty. She's pulling back now hard. Why am I scared of gold? It always goes up. I'm scared. I don't know how to trade the gold. All right, well, we got Fed Powell speaking later on here at 2:30. Hopefully price action gets a little bit better now. Just sucks that we're right back to the fucking range again, you know? Ugh. Nasdaq really taking a hit right now. ES is kind of pulled back to the VWAP. Nasdaq back down here to the 415, 416s. Take out that 400 level again, back to the 380s. The fucking pump before the dump. We got some movement. Steven said, nice guest today. I like the guest today. J Money, D Money, Money D Money, Money D. All right, Nasdaq dipping hard right now. Down there 360, 370s here. Nasdaq just kind of dumping down there through the low. Nasdaq making a new low right now. Gold also pulling back. Everything pulling back right now. We got Powell speaking later on. And I wondered. I mean, we should have got short at the 500s. That would have been genius, wouldn't it have been? Wouldn't that have been real fucking smart? Couldn't have done that though, right? No. That would have been too easy. That would have been too fucking easy, chat. You know, it just would have been too fucking easy. Nasdaq just absolutely getting murdered right now. 330s. Finally getting some momentum there. All the way down there, 340, 330s. Sell the news, buy the rumor, sell the news. Gold back down as well. Nasdaq just absolutely getting murdered right now. Down big. Down big on the Nasdaq here. She's going down big, chat. Oof. Oh my Lord. Like it's going. 300s now. Where's the bounce at? That's my question. I want to know. Took out the 300 just to pop it right back up again. Something that this is a gem. They dropped it right below 300. Right below 300. Took out the 300s. And then now a little reaction off of that pivot point there. Nice little push back up there. I love when the market's moving, man. It's fun. It's fun. Look at it. It's fun. Took this little long here in my personal account, kind of when we got this swipe of that 300 level, got long here, sold into this little push for an easy $4,000. She might make a little, I mean, I feel like even if we're gonna go lower, we gotta kind of push back up, build like a bit of a bear flag out there. So I'll take that, make a little bit of money here and there. I passed the Apex accounts, yes. That was too easy. Too fucking easy to pass those, boys. Too easy. Did the numbers come out? Yeah, no, they came out. Yeah, I know the short was the way. That fucking 520 area short would have been beautiful. Gold popping back up. Nasdaq just kind of holding there. What am I thinking now? I'm thinking maybe to see what happens with this 400 level, right? If we get stuck below 400, maybe we build out a bear flag and we try to go lower from there, maybe. Don't really have any like major preference here. Stuck below the 380s. Looks like that bear flag's playing out now. All right, we're going to have Powell coming up here in about 9 minutes for the press conference, so don't get too excited just yet. It ain't over until Daddy Powell talks, okay? So let's see what he gonna do. The news so far here is 25 basis points. Market put in a little higher low, ripped back up, kind of invalidating that bear flag for now. Both the ES and the Nasdaq kind of dipped down, just popping back up. ES is ripping back up now, back to the VWAP. Nasdaq VWAP at the 449s. Looking at different time frames here. It's 15-minute chart. Back up there to that 400 level once again. Young money, young money. Good morning, ladies. Is he going to say good morning or is he going to say good afternoon? I think he's going to say good afternoon. A million, a million, a million. All right, we're back up on the EMAs here on the 1 minute chart. Like, is this bull flag from the 420s back up to the VWAP 450 area? Or is this a big bear flag? A million, a million. Right there at that pivot point. A million. I want to make a million. Come on, pal. Pump it. A million. Pump it. 1 million. A million. We gonna make a million. A million. We make a million. All right, good time to be patient. This is when we're gonna start chopping around with this fucking conference coming up, you know? Let it do what it's doing, and then we gonna figure it out from there. A million. Pumping again. I gotta pump it again. Pump it again. Pump it up. Pump it up. Back up there towards the VWAP now. Sometimes you gotta just shake your booty. Daddy Powell about to come. About to come out. Come and walk outside here. Where's he at? Let's go see. Where's Daddy Powell at? A million. Dude, there's so many people live right now on YouTube. Everybody's live right now. There are literally a million different YouTube channels that are just live. I've been making the money though, okay? Right now, we're up $7,000 in my cash account. Just scalping these little 10-point, 20-point little pops. Rock the house. Powell, where you at, baby daddy? The market's waiting. Where is he? The funniest is like the chat on C. Look at the chat. People are just going off. The amount of degenerate gamblers that are waiting to see what he says. You know, like the amount of degenerate gamblers who are just sitting there hoping. They all got 0-day options right now. They all got them 0-day options. Here he comes. What's he say? Good morning? Good afternoon.
Good afternoon.
Oh!
My colleagues and I
I
remain
knew it!
squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
Let me turn that
While
off
the
real quick.
unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen.
Dude, his microphone
At the
sucks.
same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by 1/4 percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2%
Well, the market
goal,
is
and keeping
just
longer-term
chopping around right now. We popped up, we dropped down.
anchored.
Where we go from here is the
Our
million-dollar
success
question.
in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
All right. Now he gets to answer questions.
Great. Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Miron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Okay, and then just as a quick follow-up, I'm sorry, can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year.
Markets is not really going anywhere.
And, you know, it's also possible that there may be effects on unemployment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nasdaq down there at that pivot point right now, just holding up 320 area. Just popped right off there
Chair
again.
Powell, do economic conditions
chop
and
is
the
real
balance of
here
risks
until
no
this
longer warrant a
conference is
restrictive policy
over?
setting?
So I don't think we can say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that. But we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted, and how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market
I don't like
evolve.
that news.
I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now, and so that warrants a change in policy.
Colby Smith with the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the
All right,
fact
down
that
here
the
to this
forecast for
low again at the
unemployment didn't
300s.
change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off. And that tells you that it's time to take that into account in our policy.
So just looking at the SEP, once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low, it's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which
Market kind of like below this pivot point here. Do we double bottom there?
How do you see
gold
that,
is just tanking right now? Gold all the way back down.
Which has remained,
Nasdaq down,
almost a full percentage point above your target.
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
I can follow up. Every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But that's, that's literally how you put the projections together. You're writing down a rate path, which is designed to create, over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years, but the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process.
Here comes the pump.
That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that, though, right? We have to. Our job is literally to make sure that that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened. So the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is quite an unusual situation. How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal? So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment, and the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on, so that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months, and it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. Let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path.
Gold is all the way back down.
The
made
actual
a
decisions we make are going to
740,
be
kind of
based on
745
the
high, and then
incoming
pulled all the way
data, the
back
evolving
down.
outlook
So
and the balance of risks at the time the
Interesting.
decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all
we got a pivot point down there next,
that you
226.
have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico.
Politico.
You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and
You got a bunch of support down here. This 2.4, the last little low there, 209. Look at this hourly candle right now.
You'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now. And people they're making their arguments, and we're having really a great discussion around these challenges.
I can't wait to see what Trump says later.
So,
pow, that idiot.
Do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount. And I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model. Because a good amount of job creation happens around new companies and how many go out of business, how many are founded. And it's just really hard. You can't survey for that. You've got to have a model that predicts that. And it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still well good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret.
I wonder why nobody wants to do a survey.
We want higher response rates, and we need those to have less volatile data.
What we could do is we could pay for the surveys.
To make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes.
That's the
secret
not a mystery right there, boys.
That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month, and you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
But for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. It shows a weaker job market coming into this year. If you had had that information, would it have changed your mind?
Got some resistance, kind of stacking up there, 350s.
We have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks. Howard Schneider with Reuters. So as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. Black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I hadn't to say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter, and I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that. You see minority unemployment going up, you see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
Hourly candle about to close
the
here.
Growth mix right now seems very concentrated. In
big wick to the downside there. More wick on the downside than the upside.
Side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations.
All right, here's that VWAP level again.
Higher earning consumers.
So get back above the VWAP. The bulls might get back going.
Nonetheless,
no trade right now. Just watching this.
I think the economy
madness.
is it's moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So labor market unemployment is low, but downside risks, but it's still a low unemployment rate. So that's how we see it.
That's how we see it.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from
New
mission
hourly
creep
candle
and
opening up.
institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
I, of course, am not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve Federal Reserve System and at the board.
Ripping back up here now.
Size?
What
We're
a
actually
time
going
to
through
be
a
alive.
10% headcount reduction.
Look at
through
this
the whole
hourly
Fed,
chart.
including the board and all the reserve banks. The employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that, and I think we'll probably do more than that. So I think we're certainly open to constructive criticism and ways to do our jobs better.
Not an independent review?
We're certainly open to to always trying to do better.
Skinny Head and Shoulders. Like a hot dog.
Chairman Neil Irwin with Axios. There's been some
Hot dog
debate
with a
lately
little
on
bun.
whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess and
Little
widely
bun.
shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college. And yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use AI more than they had in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down. And so it's probably a number of things. But yeah, it's probably a factor. Hard to say how big it is.
AI factor.
Thanks, Mr.
Right there
Chairman.
of the VWAP now. If we can
what
pump out
evidence
of
do you
this,
see of tariffs showing up in the
maybe head back up there into the 500s again,
Well, if
520s.
You can take goods, just sort of the broad goods category. And last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was, goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic, of course. Goods inflation went very high, but we had essentially returned to zero or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, analysts have different views, but we think it's contributing, 0.3 or 0.4, something like that, to the current core PCE inflation reading, which is 2.9%. So
Right here, tapping on that 450 area again.
What seems to be happening is that, the tariffs are mostly not being paid by exporters, mostly being paid by really the companies that sit between the exporter and the consumer. So if you buy something and you sell it through retail or you use it to make a product, you're probably taking a lot of those costs on and not able to pass it fully along to the consumer yet. That appears to be what we're seeing. All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, the pass-through has been pretty small. It's been slower and smaller than we thought. But the evidence is it's very clear that there's some pass-through.
The evidence is very clear, Chad.
If you could share with us the conditions under which you
We are
might
pumping
consider
it back
leaving the
up
Fed
here towards that 500
May.
level.
I have nothing new on that for you today.
I have nothing new for you today.
Hi, Katerina Saraiva with Bloomberg News. I just wanted to follow up on one of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues, do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of, the forecasts that we see today? I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret, what you guys are saying?
Yeah, what are you trying to say?
12 vote, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, can really, the only way for any voter to really move things around is to be incredibly persuasive. And the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all that matters. And that's how it's going to work. And I think that is the way the
yeah, a 230-point move back from the lows right now in the last pretty much
I wanted to ask about a Gallup
10
poll that
minutes.
showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the economy. Why do you think that is, and what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us, and we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our
pumping
jobs.
it. ES is all the way back up to yesterday's close now.
Given the range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know
There's
just
that
what you
500
think the
push on the
drivers
Nasdaq
were
now.
of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between, someone even expecting rates to end up higher by the end of the year to 5
Look at
cuts.
that
I mean,
fucking
what were
A,
the kind of
240
range
to
of
the
views you
moon.
had about, on one
To the
side,
moon,
why
Chad.
there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
So I think there's quite a wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted.
I got it. We got the idea now. I think we got the idea, right? We got the idea, chat. We got the idea. Yeah, no, I passed all the accounts again. So we're good. We're back in the green, baby. Good thing Apex is 80% off. Okay, good thing. Ugh. If only the market moved 100 points in 10 minutes every day, then I'd be real rich. Then I would be real rich, okay? I'd be real rich. Yes, I blew up the Apex accounts yesterday. I literally said that in the video that I made yesterday. But yes, we blew up the accounts yesterday. I went on tilt, got chopped up, whatever. Just the honesty of it. The fuck is this? Right there, 520 area, right where we got stuck earlier. Kind of a double top. This is, we got stuck there early. Even this morning, 9:55, we got stuck right there. Now what? Should I get long again? Oh, God. We need Powell to stop talking, and then maybe we get long again. I mean, I feel like we're done going down, but I don't know. I passed 20 Apex accounts today. Or I think, yeah, 20. So, gotta love FOMC, baby. It's so easy to pass accounts when the market's moving. You know, like it's too easy. If the market's moving, it's easy. It's easy. It's easy when it's moving. Problem is when the market's not moving. What do? You know, that's when you get fucked. That's when you lose it all, Chad. I don't have all the answers, but one thing that I do know is that when the market's moving, I can make money. If it's not moving, that's when I fuck myself. I know it sounds weird to say it like that, but it's the truth. It really is. It's just the truth, man. I just got to be able to avoid the chop. You can see we got long here for the pump, FOMC pump, locked it in, took a short, did some, I don't know what we're looking. I think we did something there, but whatever. See what happens here next. Look at gold. Gold just got murdered. Gold right back down. I feel like with the fact that gold is dumping right now, Nasdaq's going to try to push back up here, so. Can you explain how I passed the accounts? I mean, basically, got long here at the 450s, sold here at the 501s. I needed to make a couple more thousand. Sold here. Yeah. Very aggressively. Very, very aggressively, basically. Yeah, just gamble on it. That's the best thing to do. Patrick, can you explain how to be rich? Find an opportunity to leverage your skill set and then get paid a lot of money to do it. That's all. I think that's the number one. That would be my tip on how to get rich. Figure out what you're good at, leverage it, and yeah. Inherit. No, I didn't inherit. That is such a typical answer. I mean, what else? What do you want me to say? Like, what am I going to say? Hey, everybody, the secret to getting rich is you got to wake up in the morning. You got to do 100 push-ups. You got to do, you know. I don't know what to even tell you. Like, what else can I say? Patrick, how do you get rich? I just figure out something, an opportunity, man. Like, you got to see an opportunity that nobody else sees. I don't know what else to say. That's the only, I don't have any other answer, to be honest. Maybe it's not the answer you want to hear, but that's the truth. Stay with me, baby. Hold it on low, 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 low. Oh, by the way, next week, we got 2 female traders. We got Terry Trades. We got Trades by Arena coming to the BDH. That's right, 5 days, $25,000 on the line. I'm not even kidding right now. $25,000, whoever trades the best for 1 week, 5 days, is getting $25,000. No Tory trades. She declined to come. It's been a long time since Tory trades has come. I mean, she doesn't want to come to the BDH. Stay with me, stay with me, stay with me, baby. Alex, sit down, boy. Trades by Reno would whoop your ass, Alex. Alex in the chat chirping right now. He thinks you gotta come. He go, I'll come show them girls how to trade. Stay with me, stay with me. Think this is gonna pump up now? Pull back down to the VWAP again. Is Powell, when's Powell done talking? Yes, it's 1 day to pass Apex. 1 day pass, 80% off right now. Patrick, are you using multiple time frame strategy or just a single time frame? I mean, I feel like that's like a, like what? Basically, I just if I see a green candle, I go long. If I see a red candle, I go short. Can I explain the take profit trader rule? Means no trading 1 minute before or after the news. What the fuck do you want me to explain? Okay, let me explain it. So listen. 1 minute before and then 1 minute after. You're not allowed to trade. Is that, did I, is it, how long is the news release? I mean, I don't know. What if you're already in a trade? I don't know, man. Go ask the customer service people. This is not this is not fucking take profit trader customer service. All right, I got no idea what I'm doing. Patrick, if I make $200 on day one of Take Profit Trader Pro account, can I take that out? No, I think you got to hit the buffer, right? Whatever the buffer is, you got to get over the buffer. Patrick, I passed the Apex account, but I don't see the activation. Don't worry, it's coming. Relax. It's coming. No doubt in my mind. Does my hair look beautiful? Any chance you would even explain that to someone new here first time, what the fuck they are talking about? I don't even know what you're talking about. I can't answer a question about something that I don't even know what you're talking. How am I gonna answer a question when you have a question and I don't even know what the question is? What am I gonna do? Patrick, could you explain to me how you explain to somebody who doesn't know what the question is? I don't know what that means. Patrick, why couldn't I take a trade on your Apex eval today? Did you blow it? I don't know why. Did you blow it? I don't know. What do you want me to tell you? I don't know. Did you blow it? I mean, I think you did. If you can't take a trade on it, did you hit the max loss? Where's the Subaru? It's at the shop. We pulled the engine out of the Subaru. No way. Why is it? You gotta be kidding me right now. You gotta be kidding me. You gotta be kidding me right now. The high of that candle was 506. I had a sell at 507. How does that work? The market makers. Are you kidding me? Are you kidding me? 1 point away? Literally. Dude. Fuck me. Now it goes. I love trading. Isn't trading so like 1 point? 1 fucking point away. What a joke. Literally, what a joke. When is Rips coming to the BDH? I don't know, man. Ask him. I've asked him. I'm not gonna keep begging him to come. If he don't want to come, I'm not gonna lose sleep over it, to be honest. The offer has been offered. Set me free. What are they doing in the Subaru engine? We're getting a whole new engine built. Getting a new block, everything done to it. Got to build it into a race car, man. I think we're going to go higher, to be honest. I mean, I feel like we're going to break out here. Once Powell stops talking, could maybe push up there at least to the overnight high. You know, at least. Anybody else feel like that? Did Powell stop talking? Finally? Music is too loud. Sorry. Put on your earmuffs, Grandma. Put on your earmuffs, Grandma.
Please, Patrick, what's this playlist?
Dude, guy paid $2 to know my playlist. I would tell you, but then I'd have to kill you. I'd have to kill you. Honestly, it's just Fisher. On it's his live set from London. Put up 2 weeks ago. That's me. This is actually me on the weekends. This is me at 11. I could be a DJ. If this trading stuff don't work out, I could become a DJ, you know? I could. Y'all be like laughing, but I could. I could be a DJ. I'd be like this. Maybe like this, you know? could do it. I could. I could be a DJ. Look at it, no problem. Put me in front of a crowd. I could do it. Y'all don't think I could, but I could. I could DJ the shit out of this place. Need to work on my twerking. Yeah, you come over and say that to my face. You come say that to my face. Oh, God. Freak, 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 freak. Look at this. We're inside the 15-minute range again, boys. I can be a freak. I can be a freak. She wants to break out, right? I mean, right? Maybe? I don't know.
I can be a freak.
The overnight high is 553. We got a pivot point right there as well. 556s, so.
I can be a freak. I can be a freak.
I can be a freak. How much are those Porsches worth? Let me think. Let me think. Let me think for a minute. Let me think. This one, I'd say like 250,000. Jennifer up top, I'd say like 300,000. The gray one, I'd say probably 200,000. So you're looking at about $750,000 worth of cars just sitting behind me here, chat, okay? Patrick, it says liquidation only. Contract is about to be expired. Please contact the trade desk. Yeah. Trade the newer contract, bro. NQZ5. How much horsepower? Bro, they're Porsches. They don't have horsepower. They're air-cooled Porsches. They don't put out a lot of horsepower. Maybe like 270 horsepower. Bro, you're a real YouTuber. What? I'm the only YouTuber. Get it straight, get it right, get it tight. All right, there we go. Nasdaq pushing to the 5. Did I not tell you that we were going for this high? Come on, Chad. Did I not say it? Nobody ever believes me. They think that I'm just a YouTuber and I don't know what I'm doing, but I do know what I'm doing. Can somebody help Dice Plays in the chat? This guy needs a lot of help right now. I don't know what he's talking about. Would you ever do a car giveaway? Which car would I give away? You know, that's the question. I'm not giving away my babies. These are my collectibles. These are my artwork. It's artwork. Like what I gotta keep these cars forever now. One day I'm gonna sell each of these cars for $1 million. The cool thing is somebody could buy these cars and then they could be like, yeah, I bought Patrick Wieland's old Porsche that the whole entire world has seen. You know, like this is a famous car. These are famous cars now. Every day, 30,000 people see these cars. No, but serious talk, chat, serious talk, all right? Not even joking, but serious talk. What do you guys think about D-Money? Who likes D-Money? Who doesn't like D-Money? Should I give D-Money a full-time job at the BDH? He seems like he's a pretty good trader. I think he get, a little bit of coaching, a little bit of work. We can get him fired up, make him, a big-time player. Turn him into the biggest, the largest co-host, So, I think it'd be fun. Be fun to, D-Money up in here. $1 million deal. Give him his own. Yeah, I think like maybe in the future he could do the afternoon show, you know, because like I get tired. I can't be trading, doing everything. I'll do the morning show at the BDH. He'll do Power Hour. It could be a vibe, you know, like it could be a good little vibe thing. And it was also his first time on the stream, you know. Give me a couple weeks with him. You know, give me a couple weeks with him. I'll get him fired up. He'll be fucking printing money. Printing money. He might not be like a YouTuber right now, but like when I first started, I didn't know what I was, you know, like I didn't really have anything special either, to be honest, so. I need a co-host. I've been looking for a co-host, to be honest. Like, I want someone who can do shit when I'm not here. I want to go on vacation and I want someone else to do the work. I built the empire. Now it's time for me to enjoy it, you know? No, he had some good trades today. I think his trades were good today. Some David said it, to be honest, I would turn the stream off. I mean, whatever, David. I can't do everything, bro. Gotta try something new every once in a while. That way it's not always just me blabbering, you know? Like it'd be nice to like have other people talk a little bit. It's always me, blah, 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 blah. I'm getting tired of hearing myself talk. I see videos of myself and I'm like, fuck, do I really sound like that? You know, like it's kind of like getting Australian at the BDH. Well, I mean, Australia's kind of far away from the BDH, so I don't know if that's gonna be possible. All right, Nasdaq pushed all the way back up there to the 550 area, kind of like over to the overnight high, and now just stuck here, going nowhere. Back down again, 500s. Right now, the deal at funding ticks, $50. $50 for the 50K account when you select the $1,000 payout. Not bad. That's all-in cost, no activation fee, 35% off all the accounts at Funding Ticks. Use the code PW. They got the straight to funded. They got the core. They got the Pro Plus. The Pro Plus is a normal eval. Then you go into a funded account. All right. Well, Nasdaq kind of chopping back down here. I love that we're just inside the 15 fucking minute range. Look at all that. All of this just to go nowhere. Patrick, people come to watch your trading specifically. While other traders can be seen on hundreds of other YouTube channels. Damn, so that just means I'm stuck forever. I can never have another life. Like I have to trade every day for the rest of my life. Fuck. You want to know why price stops where it did? Not want to be known. It will all be very interesting why. What the fuck does that mean? Literally, what in the fuck did you just say? Patrick, do you want to know why? Yeah, I want to know why. Okay, tell me. Patrick, if you know why, you can tell why. What? You know, like what did you just say? Patrick, I can tell you why, but if I tell you, then I have to kill you. Let me guess. It went up and then it got stuck and then it went down? Is that why? I don't know. Patrick, you gotta know why. Why did it get stuck down? Patrick, I will tell you why it got stuck, but then I have to you'll never understand why. Okay, well tell me, please. Please tell me. Why is no one ever tell me the secret? I'll buy your secret. What's your next car purchase? I probably won't be buying any cars. I'm done with cars. My next purchase is gonna be $1.4 million boat. And then after that, I'm gonna buy another boat. And then I'm gonna buy a race truck. And then I'm gonna buy another thing. And then I'm gonna buy another, you know what I mean? Like, I got no more money for the cause. I bought a trailer. Yeah, Ginger bought a trailer for the Baja truck, for the trophy truck. Fucking a $20,000 trailer to pull my $600,000 trophy truck around. Can't drive it on the road, so I gotta pull it everywhere. You know, gotta drive it on the trailer everywhere when I go places. I'm gonna pull up to your mom's house in my trailer and with the trophy truck on the back. You know, I'm gonna pull up your mom's house in my trailer. Tick No Talk said no, not a boat. Buy a boat from Greg. Greg's poor. I'm rich. I don't want no little wakeboarding boat. All right, I don't want no little wakeboarding boat. I want a big fishing boat so I can get some big old titties on there and then go to the Bahamas. And then once we get over there, I say, hey, everybody, you all know the rules. This is a nudist boat. If you don't take off your clothes, you gotta swim home. And it's about a 5,000-mile swim. So, you know, I'm just saying, it might be the right time to take off your clothes.
Just watch me.
Oh, God. I need like one more good trade here. I need one more good trade just to feed my appetite. You know, to feed my appetite, boys. I need it. I need to feed my appetite right now. One more good trade. What do we got? What time is it? 3:39. 3:50 is gonna get wild. You need a cruising cat. Do I look like a cruising cat kind of guy? You know, do I look like a cruising cat kind of guy?
Just watch me.
Bow.
Just watch me. Just watch me.
Nasdaq did all of that movement, all that action just to chop around some more. In the fucking 15-minute range. Amazing. Absolutely amazing. Like how? Why? You know, why, Nasdaq? NASDAQ. Why?
Get down. Get down.
Getting real tight here. Something's gonna happen. 350 should be something. Some volatility here. 350 candle. Get ready. Down, down, down. Oh, she's getting tight, boys. Something's about to happen.
It's time to get down. It's time to get down. It's time to get down. It's time to get down.
It's gonna get back above like 505, maybe start squeezing back up there.
It's time to get down. It's time to get
So are you making money when it goes down? I try. I try. Very carefully.
It's time to get down. It's time to get down.
It's time to get down.
It's time to get down. It's time to get down. Get down.
Oh my God, Nasdaq. Do something. Use my body. Take control. I want to use my body. Take control. Use my body. Take control. Use my body. Five minutes until the market makes a massive move. Hit that like button, baby. We're back tomorrow morning doing it live once again from the BDH. My body. You know what's hilarious? I don't want to like say I said it. I don't want to say I said it. But like, can I point out something? Honestly, can I point something out? Earlier this morning, I was like, wait, I think this is what's gonna happen, right? We're gonna end up fucking getting some crazy stupid move on the FOMC, and we're gonna end up closing right where we fucking opened at. I literally said that this morning. And here we are. Gotta love it. Yeah, it's literally just fucking comedy. I gotta go back and find the quote, but I definitely said it on the live stream this morning. I'm like, watch. Because basically the way I was thinking about it, if we had a 25%, if we had a 25-point base, a 25-point cut, then basically it's like a non-event, right? It's like just one big non-event. And that's pretty much what it was. Exactly. Everybody was expecting the cut, and that's exactly what they got, so the market went nowhere. That drop to the downside was just manipulation, just to get everybody fucking loading up down there at the lows. See what happens here at 350 if we can break through this high from earlier. Thursday, Friday, hopefully get some better price action. Now that the Fed has done their damage, the market's moved, and we'll see where she goes next. I think either way, here in the next 3 minutes, we should get a little bumpity bump. The Dow is up green on the day. ES is flirting with going green on the day. The ES is right there. The Nasdaq's right there. I think I might pump here end of day. Just a little bit, just to get back up there 550, 540 area into this. You know, we'll see. The dip before MOC. Blake said, I'm new here, so I might need some help. Trust me, Blake. You're gonna need help. And we can't help you. This is an advanced live stream for only advanced gamblers. You gotta really know what you're doing around here to be able to hang out with these boys. All right. We got no room for no pussy shit around here. All right. By the way, next week we got 2 female traders battling it out at the BDH for 5 days. We got $25,000 on the line as well. Someone's getting paid $25,000. They're gonna head-to-head battle live on YouTube. That's right, 2 female traders. It's kind of like I called it the battle of the sex because it's just one sex. There's the pump. Oh, then the dump. The pump dump. Don't. Don't look me in the eye. Don't you do it. Don't you do it, chat. Oh, fucking MOC. We're going nowhere. It's over. It's over. It's all over.
Take it up. Slow, steady, undress. Impress.
Take it off. Slow, steady, undress. Impress. Take it off.
Slow, steady, undress. Impress.
Guys, I knew the market was going to move at 350. I just knew it.
Slow, steady.
Buy my course, Top Secret. I'll teach you how to know when the 350 algorithm kicks in. I will teach you the secrets of trading. Got the VWAP down there at the 439s. We're right here at this pivot point now. Going nowhere, so.
Take it up. Slow, steady, undress. Impress.
We're gonna have to come back tomorrow morning and do it all over again, chat. That's right.
Success. Take it up. Slow, steady, undress. Impress. Take it up.
Slow, steady, undress.
Take it up. Slow, steady,
Undress. Impress.
Take it up. Slow, steady, undress. Success. Take it up.
Whoa, fuck, that was uneventful. Going nowhere. I think it's a good time. Well, I mean, it's over basically, but I think it's a good time to walk away. It's over. Yeah, about 25 seconds, get another little pop of volatility. But this ain't going nowhere right now, so. I wouldn't be surprised if we gap up tomorrow. Overnight, Asian markets and blah, 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 London market pump it higher. It would not surprise me one bit, if you know what I mean. It wouldn't.
Take your motherfucking clothes off.
It would not surprise me one bit.
ain't never giving up. Back up in my pocket. Guess they wanted to test my luck. Finger on the trigger. I ain't never giving up. Back up in my pocket. Guess they wanted
Back down again off that 500 level.
on the trigger. I ain't let it bang.
PW gives me Grant Cardone vibes. Do I look gay? Is that what you're trying to say? Do I give you gay vibes? Grant Cardone, LOL. Hey, I'm gonna teach you guys how to 10x your life. 10x. I'm gonna 10x you. I'm gonna give you all 10 inches. I'm gonna 10x. You want 10x of mine? I'll give you it. Get out of here. Patrick, just talk to us for another hour. Oh, God. Haters are gonna hate. Players are gonna play.
Let it bang.
All right, we got 1 minute till the bell. Ding, ding, ding. This is Fisher, yes. Dude, what are you talking about? How do I buy packs for you to open for me? The Pokemon cards? This is not a Pokemon card channel, dude. Somebody help this guy. We're not doing Pokemon here. The fuck? La 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 la. And they're gonna close it right there at the fucking VWAP. Right at the fucking VWAP. Wow. All right, there it is, chat. If you guys haven't already hit that like button, subscribe button, you know what to do. I'll talk to you all later on. Nasdaq just stuck here, going nowhere in the last fucking 30 minutes. Classic. I was really hopeful of something good to happen, but you saw it ain't good, it ain't good, it ain't good. So. All right, I'll see you guys later on. If you haven't already hit that like button, subscribe button, you know what to do. I'll see you tomorrow morning. We're back here live at the BDH. Hopefully get some good price action, make some money, and do it all right here, right now. Peace to the Middle East. Later. It's not gambling if you know where the market's gonna go.
Steady.